And you're up next, G. I'm doing
How you doing?
I'm doing fantastic, brother.
My name is Austin, 38. I'm in South Carolina. Been trading ICT concepts about 3 years or so. My question is about the quadrants. And if you've answered this already, I'll be more than happy to go back and listen to it because I was a little late to the party. But when we have quadrants, and let's say, for example, we're looking particularly at 25 and 50% of our quarters, right? You mentioned that if you divide that 50% of the quadrant will give us an event horizon, right? And I know that 50% mark would be exactly 37 and a half, which is where the octant comes from, right? So that would be the 8th level. So basically 25, 37 and a half, 50. Okay. If I take 2/8 and I divide that, that gives me a 16th right at 50%, right? Which is an event horizon scenario. So my question is there a method to which if I keep dividing these things and getting the fraction of price, fraction of time, fraction of numbers, can I see something that would indicate what the next move is? So if I can give one more example. So if we push up in a range, let's say we divided the new weekly opening gap today, right? We put our eighths on it. And let's say we push to 50% and price is staying beneath 50%. The bodies are closing beneath. We know that's a sign of bearishness.
So order flow.
Right?
Order flow is bearish based on your measurement. Yeah?
Correct.
Okay.
All right. So we're staying beneath 50% of this big range here, right? In between 25 and 50, if I divide that and I'm staying beneath 50% of that one, so that means now I'm staying beneath 50% of the eighth. Obviously, that's telling us we're even more bearish than what the initial one's saying. Are you with me? If I keep dividing these and they all are staying beneath 50%, that obviously should say that's extremely bearish.
You're
Where
on
I'm
side
getting
if
lost.
you're bearish. Yes.
Correct. Where I'm getting, I guess where my question is coming from here, now that I've explained all of that. If we hold, at what point do we realize how bearish or bullish we are in this theology? Does that make sense? So if I've divided it 3 times, but on this third one, price is actually closing above 50%, is that an indication that I'm going to text the next bigger level, or am I reading too deep into it? Does that make sense?
Well, you're going to have 3 levels. Your defense is you have to have 3 PD arrays from where price is right now at current market price at any given time. Go back 3 PD arrays. It might be an octant. It might be a quadrant. It might be an order block that agrees with these levels. The P level has to be associated with these gradient levels. The importance of it is knowing if you're on side, yes, but more specifically, when you don't have these levels on price action and you're watching them create these little tails or these little wicks while price is running and the little tiny little retracements that go back against your underlying position you're holding, as long as price goes back to those levels that are gradient levels and they're not laying the bodies across them, if it's bearish, it won't lay a body on it. It can wick to it, it can wick through it, but the bodies have to keep telling you the narrative is still you're on side. So you're constantly getting real-time feedback with these smaller little measurements because it keeps your focus on trusting what's being delivered at the moment, and don't try to look for a reversal. Don't try to time the reversal. Stick to the trades you're in. That's the real benefit of having these things on your chart, and also qualifying PD arrays that are on real specific time and price delivery.
That makes sense. So what you're saying that it actually was leading right into my next question. So if we have a body that does lay on top of one of these levels, is that an indication that we're going to test the very next one?
It could be an early sign, like we were using that analogy today, the canary in the coal mine. It could be an early warning sign that you have to start demanding price get back in line. It needs to start showing you something. Otherwise, you could be in a position where you may have to take some of the position off because it may be warranting that. Or it could be like, I'm going to close the trade. I'm not interested in holding it now because it's showing my first sign of potentially reversing. It can. I don't want to give that much to everybody in one grand scheme because then I'm shaping your model. Then I'm shaping your perspective on it.
That makes sense. So when you mention about we count 20 days back on the daily chart and we find our high and our low of our dealing range there and we divide it by our quadrants, right? And you mentioned that in between 25 and 50% and in between 50 and 75%, in between those quadrants is where the best PD arrays are going to form. What takes precedent over the other one? If I grade that range itself or the actual PD array within that quadrant to
The
grade that
actionable,
PD array?
the actionable point, if a PDA forms and you're implementing that as a trade mechanism for entry or targeting or a pyramiding and new position to an existing position, as soon as you start adopting that PDA array, then you're measuring that. That's the proving ground. It's not the gradients above it. You now have an actionable point. So your reference has to be framed on that context, not something above it or below it. You went to the business of finding that PDA at key level. You're using it to get into a trade, or you're using it to frame a trade. Now it needs to hold its own weight.
That makes sense. That makes sense. Okay, one last thing. So, and it's still in context here. You posted on Twitter last week an image and you asked if we saw squares or circles, right? When I think about these gradient levels, is there a way we can grade vertically with time that will match this price that gives us a grid of a specific price that we're looking for?
Yes, it'll be in the books.
All right, I thought so. Cool. All right, thanks, Michael. I appreciate it, man.